We begin with today's market action and a mixed session, as John just mentioned, for the major averages following Tuesday's rally. Joining us now, Vital Knowledge founder Adam Crisafulli. Adam, it does mixed and modest, I'll call it, with some of these moves. The NASDAQ 100 basically ending the day completely flat here. I want to get your thoughts on whether the trajectory from here is higher or lower and why.
So I think the overall S&P has a little bit further to go on the upside. I really don't think it can get much higher than about 45.50 in the near to medium term. So that gives you about 4%, call it. So there's a little bit more to go. And I think the catalyst is going to be intensifying disinflationary pressures. But rather than chase that index just for a couple more percent, I think some of the more beleaguered groups have more upside potential. So small caps, banks, energy, and then even China. I think those areas of the market have more upside potential than the broader S&P, but I do think there's a little bit more upside to go.
Okay. We'll note that Micron earnings are out. We're going through those results. We're going to get them to you in just a moment here. In terms of the disinflation, we've talked about it before, but it's worth retreading this, especially in a day where we did get hawkish commentary or the reiteration of some hawkish commentary by major central bankers earlier today. The disinflation narrative, positive or negative for stocks? How do you think about it?
I think in the near term, it's going to be positive from a macro perspective. I think you're going to see the PCEs, the CPIs continue to move down meaningfully going forward. So in the near term, it's positive, and then the attendant implications that has for monetary policy. Eventually, though, looking out over the next couple of months, it's going to start to create some complications for earnings. And you're seeing this play out a little bit in certain pockets of retail, where cooling prices is going to start again being a headwind for earnings power for certain industries, and that's going to trip up parts of the market. But I think in the near term, it's going to be a broader macro positive.
So, Adam, I guess what are the downside risks for the market more broadly? I mean, maybe earnings specifically, but the potential catalyst to the downside. In a way, maybe this move higher has been the removal of so many of the things that investors were worried about so far in 23.
Yeah, I mean, I think obviously growth is a concern. You've had an enormous amount of monetary tightening around the world. The economy has been very resilient despite all that, but there is a lag effect. So I think growth is something to watch very closely. I think in the last couple of weeks, you've seen people, I think, become a lot more comfortable with the underlying growth trajectory. Just yesterday, you had that very bullish Delta presentation, and then the consumer confidence report as well that showed a big increase. So I think some of the growth concerns are abating, but that's still an area to watch. And then core inflation is still an area that is going to be worth watching as well. Core prices have not cooled nearly as much as headline numbers have, and that was a big theme at the Sintra conference in Portugal this week, where central bankers acknowledge that the headline inflation figures are breaking lower, but the core numbers are not. And so that's going to be very important that the core inflation really starts to follow the headline inflation readings.
What about China? We are about to bring you Micron results once we've gone through, but that stock popping a bit after hours. It already had some individual China issues that had sent the stock lower weeks ago, but there have been increased tensions related to China. Yellen is headed there before too long. Could that pose any kind of an issue for the market, or are we more on the path to cooling in a good way of the tense relationship with China geopolitically?
It does seem that temperatures have been lowered a little bit in that relationship. So the Blinken trip to Beijing, the fact that he was able to meet with Xi, that was an important step in stabilizing the relationship. Like you mentioned, Yellen should be going in the next couple of weeks, and then possibly Xi could be in San Francisco in November to meet with Biden. That's not confirmed yet, but that would obviously be a positive sign. So you do have efforts to stabilize the relationship, but then you also have this kind of ongoing, bigger picture decoupling. One example of which are the talks of incremental semiconductor restrictions that we saw overnight. And you're going to see more of that unfold going forward. So the geopolitical dimension of the China story is definitely the biggest overhang, in my opinion. There obviously are some growth concerns too, but I think it's much more geopolitics.